Good morning everyone, this is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 9th of December. Oil prices slipped further on concerns over supply surplus after new US projections released on Monday showed production from the big three US shale companies should carry on growing at over 100,000 barrels per day into January. Benchmark West Texas Intermediate crude for January delivery fell below $63 a barrel, while Brent crude oil dipped to just above $65 a barrel on these developments. It looks to us that the decline in oil prices is likely to continue, particularly against the background of a slowing Chinese economy, stagnating European economy, and continued high US domestic production. As for the currencies, the dollar strengthened against the high-yielding and commodity currencies after speculation that the Fed officials are considering to shift their tone at their next week policy meeting. An article from the Wall Street Journal said that the FOMC members are considering to remove the reference that they will keep interest rates low for a considerable time. Expectations of a hawkish Fed following the strong employment data are likely to keep the dollar strong, especially as the alternatives within the G10 become less attractive. Overnight, National Australia Bank Business Confidence Index for November declined to the lowest levels in July 2013. The results of the survey prompt NAB to change its interest rate prediction to 2 cuts of 25 basis points in 2015 from the Reserve Bank of Australia, or for the bank to remain on hold until 2016. The Aussie extended its losses amid this news and fell to a 4-year low. On top of that, China, Australia's biggest trading partner, showed weak domestic demand through Monday's trade figures, with plunging imports and slowed exports, piling more pressure on the Australian dollar. The subdued growth seen in Australia in the recent months, triggered mainly by the falling iron ore prices, has pushed Aussie USD down 14% from its peak in June. I expect weakening fundamentals to weigh on the Aussie, and if the decline in commodity prices continue, the pair could reach our next support of 0.81 in the not too distant future. As for today's events, in the UK, industrial production for October is expected to have decelerated from the previous month. The decline in the industrial production rate could raise concerns about the slowdown in UK's recovery and put the British pound under selling pressure. In the US, only secondary important data are coming out. The NFIB small business optimism for November is expected to have increased fractionally and to have remained near its highest level since October 2007. While this indicator is not particularly market affecting, it's well worth watching because of the Fed's emphasis on the labor market. The Job Opening and Labor Turnover Survey report for October is forecast to show that the number of job openings have increased marginally. Following last week's strong employment data, this is likely to keep the dollar supported. Wholesale inventories for October are also coming out. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.